Trading futures and options on futures involves substantial risk of loss and is not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although this could be an equation for opportunity, it's also an equation for risk. So be careful. Only fund your futures trading account with risk capital. My personal definition of risk capital is money I could afford to lose, doesn't change my lifestyle, or overly stress me out. As human beings, we make bad decisions when we're under stress, so be in a good spot. Remember, micro contracts could be friends. Take it easy on the day trade margins. You get plenty of leverage without maxing out on those day trade margins on a regular basis. We'll be taking a look at a real-time simulated live NinjaTrader trading platform today, and none of this should be construed as trade or investment advice. Past performance not indicative of future results.
Well, good afternoon and welcome to Technical Analysis Explained for Friday, November 3rd. I'll be your host, Tom Schneider, CMT with NinjaTrader. By the way, for those of you who don't know, I say this as it rolls off the tongue. CME stands for Certified Market Technician. It's a status, I guess. I don't know what you call that. It's something that you study for, you take the tests, you get certified, and it's something they require us to put when we're talking in professional situations. So it's not me thumping my chest, but it's really part of that designation. They really want you to promote it. So appreciate you putting up with me saying that every time I introduce a show. Technical Analysis Explained is a show where we like to take a deep dive into either an indicator or a concept that might have different indicators and really explain what goes into the creation of that indicator, how it's used, and maybe the theory behind it, why it might be representative of what the market is, what you see on your charts, right? What the price is doing, how that might reflect into the mindset of the traders while the market is trading. So with that, I do want to introduce today's topic, which is channels. So, channels, when we think of channels, I was preparing for the show and I thought, well, when I was a kid, what was a channel, right? Well, the traditional thing was you hear the English Channel, and it's a body of water, but really what it is, it's a strait, right? It's a very it's not like an ocean, which can have any shape that you want, or a sea, or whatever, a lake. It's a very straight body of water, and you think of the English Channel, like I mentioned, that's pretty much a confined body of water. Then you think of channels. When we were growing up, we had television sets, and that was really how we consumed our media at home. We didn't have the internet. We didn't have different websites that could stream movies and other events. We had the television, and television had channels. And I was thinking about that, and I was thinking, well, channels are also a way that something is streamlined or something is confined to a range, because a channel represented a certain part of the bandwidth of broadcast frequencies, and that frequency is resulted in a waveform. That waveform is confined to a certain length. It's another way that a channel conforms to a certain boundary, if you will, and that's television channels. And again, I don't think television channels, I don't think bodies of water anymore. I think of the markets, right? So trend channels is what I think of when I hear of a channel. So we'll start with trend channels, but we'll also talk about some other types of channels here on this show. By the way, if you want to join the chat, the chat room is open. If you have questions about channels today, we are focusing on channels. If you have questions about channels, you can go to ninjatrader.com/events. That's ninjatrader.com/EVENTS. And you can hit the play button there, and that'll bring up a chat box on the right. You can drop in your questions about channels, or if you have comments, do you use them? What do you find helps you the best? So I'm looking right now at a daily chart. Let's bring the chart up. Mission Control, thank you for that. And this is just a daily chart of the micro NASDAQ. Now, the NASDAQ being a little more volatile, I wanted to see if this channel idea can work. Certainly, I know the answer, right? But what am I trying to identify with channels? And right now, as we know, NASDAQ kind of peaked in July right here. And I have my crosshairs up. By the way, we're on the NinjaTrader 8 platform. But what I want to see in this downward trend that we have had since July, I want to know, are we hitting either an upper boundary or a lower boundary as we're trading? And can that help us inform where we might find resistance or support, even in an intraday basis, right? I want to look at a daily chart and see maybe there's a level here that this market will come near and then back off. Okay. Now, what am I interested in when I'm in a downward trend? Well, I'm more interested in when the market reverses rather than when it continues on its trend. So in this case, in a downtrend, the reverse would be an uptrend. So I want to draw the part of the channel that I want to draw first is the top channel boundary, the downward trending resistance line. So let's take a look at this. Let's go into our pencil, our drawing tool pencil, and let's find that trend channel. It's about halfway down. You can also use the control button and hit the number 2. The way I think of it is there are 2 lines and a trend channel. So control 2 will bring up that cursor. Now, can't really see the cursor because I have my my crosshairs up, but it does have a pencil. Tells me I have a drawing tool enabled. And so I'll just go to the top of the move where this downward trend started. And the second point I want to line up is the next peak high. Now, this is kind of close. I'm going to go to this one right here, the one in mid-September. And I'm going to just move this over so that the green line lands on the high on September 12th. Sorry about that. And I'm just going to extend it all the way to the current bar, but I'm really lining it up with that September 12th high. And I'm going to click once. What that'll do is it'll create not just the line you see here, but a parallel line that I can move with my mouse. So I'm going to click here, and now you'll see a parallel line, and I can move this anywhere, right? But that's not what I want to do. I want to look for the lowest point between these 2 highs, right? The start of the move down and then the next point in that resistance line. Somewhere between these 2 bars is the lowest point. Well, it's right here. I can tell you right here. Don't have to do much calculation to find that out. And what I'll generally do is I'll line up this parallel line on the beginning of the trend, but just make sure that it intersects that low that we pointed out. And you can do that like that. And there's your trend channel. Now, why is this helpful? Well, because we identified a range that's not sideways, it's slightly moving down. We can see that the market might know about this trend channel, and that when we come back here, when we have a rally, instead of going back to this target high right up here, it only went up to here. Well, why is that? Well, maybe it's because this trend channel upper boundary acted as resistance and it turns around. Now, if it turns around and you're bearish in this kind of resumption of the overall downward trend, you have a target on the downside too, right? It's the bottom of that trend line. Now, we didn't get there when the market kind of consolidated and went back up, tested this resistance again. But on the next trip down, we closed right at that support level of the bottom of the trend channel. And now you can see what's happening. We got a rebound. We're rallying. And today, my resistance level, if we continue to rally today, I would look for resistance, maybe a spot where the market doesn't trend past about 15,300, maybe just a little shy, right? So that's the beauty of the trend channel. Based on history, based on where this market extended in the other direction from the high to the low, and then back again to the high, it didn't quite get up there. Well, we've got a bearish bias. And we can use those trend lines as guides for where we might find support and resistance going forward. And of course, with anything, until it's proven differently, you might use these as good guides. So trend channels are useful for identifying support and resistance, which translates to areas of stops, targets, maybe an order entry. I might not be in a position right now, but if it gets up here, I might, my other indicators line up, if other situations line up, I might think, well, I could go short here. That might be my order target entry. If we get to 15,300 on the NASDAQ, that might be a place to go short. Now, I'm not recommending you do that. I'm just saying what this indicator might indicate. Your other indicators might say, you know what, that wouldn't be a wise thing to do. So it's always good to look at multiple indicators. But solely from this indicator, I see that this could be a place where we have resistance. And likewise, if we did find resistance there and it holds as resistance, as we say, we might see a turnaround. Now I've got a target on the downside. And that target it will move. It'll change every day. It'll get a little bit lower. So I'm not so concerned if I'm in a downtrend. If we break down, especially if we're in a steep downtrend, if we get outside that channel, because we've already determined our bias of the market, right? It's down. And if it goes more down, well, hopefully I'm on the right side of that trade because my bias is negative. I'm more concerned in a trend channel when it breaks up the other way. So this is a daily chart, though. I do want to show you that it can work on an intraday chart. Let's go to this tab. And, here, this is interesting because this is a 10-minute chart. You could switch to a 5-minute chart, a 1-minute chart. And for a long time, we were range bound, right? We saw that this 43.25 was support. And from what I understand, I don't have this on here, but this might have been yesterday's high. So that's okay. We've got a sideways channel, and you could use a trend channel and sideways motion, right? If we're trending up, I want to know when it breaks back down. I could use this trend channel line rather, and I could say, you know what? I see support here, and I'm just going to move it because I'm going to use one at this point right here as my second level, my second test of support. And then I'm going to bring this up here because now it stayed well within the channel, but it gave me an idea of if this market starts to move where I might find resistance or support. But what happened, as we know, with some news today, this changed. So what happened? Well, we got this market got a little bit of a bullish move, and we can bring in the trend channel again. This time I'm going to go to the upside. And this is interesting because you can use it on 10-minute. You could be as short or as long as you want. Just follow those rules about where you select your high and your support level and your resistance level. Now I'm going to extend it a little bit more, but I'm using these two low points to figure out the trend line. And then I'm going to line that up with the high between them. So now I've got a trend channel. And let me just bring this down here that I can use for the rest of the trading day. So those are trend channels. And this is what you see, right? This is what you see with your eyes. There's no special calculations. It's more of a process. And if you have the right process, you're using a section of the market of where the market thought that maybe the extension to both sides are. You can use those as boundaries and see, does the market test those boundaries again? So that's the purpose, I think, of a trend channel. Just in general, we're going to use that same concept. We're going to see how others have applied that concept to a different calculation. Let's go to the Donchian channel. So you might look at your indicators and notice that there's a Donchian channel in there. If I right-click and I go to indicators, you'll scroll down, and your list might look different than mine because I have some third-party studies or some NinjaTrader ecosystem studies in there. But Donchian channel should be there, and you can add that down here. Donchian channel is a great study, and its simplicity is why it's so great. So you'll notice that this is three lines here. It's an upper boundary, a lower boundary, and then a midline. And the midline is simply exactly what it sounds like. It's the middle or the halfway point between the upper boundary and the lower boundary. But you'll notice the boundaries have different inflection points, if you will, different places where they change. So let's take a look at this. This calculation right here seems a little bit like it plateaus quite a bit, right? It goes flat and then it changes and it goes flat and it changes. Maybe it changes again and then it goes flat for a time and then it changes the other way and all that. And that's moving with the market. But what's great about this is we're taking the highest high and the lowest low of a period, and we'll talk about that period in just a moment, and holding it. So really the calculation in this case is a 20-period look back. So what do I mean by that? Well, if we look at the current bar, let's just move this over and blow it up a little bit so we can see. Right here, this value, 44.30.50. That means that the highest high in the last 20 bars was 44.30 and 50 cents. So let's bring up our, sorry, wrong place. Let's bring up our crosshairs and let's go back 20 bars. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And then we've got 10 more. And so this is where the calculation starts. So it says, okay, what's the highest high in the last 20 bars? Well, there it is. But why doesn't it draw it from there? Well, because there were higher highs in the last 20 bars for the bars after this one. This was not the highest high when this was made. We could see it's all the way up here. And we could see that, you know, this bar, it came down a little bit. And this bar, it came down just a little bit. Well, that's this market trending. This is a 20 period. It's like a 20 period offset. So when the market is trending, I'm interested when these bars are hitting their 20 period, either high or low. Low on the downside, high on the upside. Now, why is that relevant? Well, if you're looking for breakout trades, if you think the market is extending, if the market goes from a consolidation phase to a trending phase, you'll see these bars touch these Donchian channels. There is a pretty widely known set or experiment, I would say, that happened many years ago in Chicago. Called the turtle trading experiment. I don't know if that's what they call it, but the situation was a couple of traders were talking about whether good traders are born or are they taught, and there was a little bit of a wager, if you will, or a competition where one of the traders said, "I can teach traders to trade well. It isn't really necessarily about being in tune to the markets. In fact, I'll put out an ad, and anybody who kind of qualifies for that ad, I'll fund them as long as they trade the way I teach them." And so this turned out to be the turtle experiment. You can read books about it, but here's the thing: their initial system, if you will, their indications came from this type of thought. Not a 20 period look back. Maybe it was a little bit longer. I think it might have been a 65 period look back. So a really long time, right? But what would be key here is I want to see when it crosses below or above. The thing about this calculation as it is it includes the current bar in its calculation. So you can never exceed these levels. You can never bust out of these channels. But I can offset this data. So if I just double click on the study, you'll notice in the top right, there's a display, or top on the right-hand side, there's a displacement feature right here. And if I just change that to 1, it pushes the bars forward, the channel forward. And so you can see where price breaks out of the channel. So right here, this might have been a signal to say, hey, you know what, instead of consolidating, we're actually moving on out. we're moving on down. And so act accordingly. Now, this is a daily chart. As with most indicators, you can use this on an intraday, but this is what this channel was looking for. Now the midline is there. You could trade it as a range bound indicator too. If it doesn't get outside of the trading the trading range, if it turns around, you might use the midline as a target for the retracement. It's like a reversion to the mean. But the turtles, I believe, they were mostly using it for a breakout trade. So breaking outside of these channels were important to their trading. And so this is a Donchian channel, and that was named by or after, it was Richard Donchian came up with this idea. I don't know how many years ago, but a while ago, a couple decades ago at least. Probably more like 3 or 4 now. But this is the Donchian channel, and it's a very interesting level channel to look at. Very easy to calculate. Highest high, lowest low. Keep the periods the same generally. I have a 20 period. You can change that as well to your needs. Let's take a quick look at the Keltner channel, because this is slightly different. This is almost like a Bollinger Band, I'll be honest with you. This is exactly like a Bollinger Band in the middle line. The middle line is a moving average. In fact, this is an exponential moving average. Let's take a look at that. I've got a 20 period moving average here, and it's an exponential moving average. So that means it's more reactive to current data. It's not evenly weighted over the 20 period. So you've got a moving average here, but instead of offsetting these bands by standard deviation, it uses the average true range, which is a measure of volatility. Another way to measure volatility is with average true range. It's a multiple of the average true range. So if we remember average true range, let's say a 20 period average true range, it looks at the range of each bar. If it's gapped up or down, it accommodates for that gap, and it just takes an average of the last 20 days. So we can get a number that makes sense, right? So if we're looking at the E-mini, the average true range has been about 60 lately. Well, if we take that average true range and add a 2 times multiple and subtract a 2 times multiple, we'll get those Keltner channels. That's all this is. This is 2 times the average true range. Now you can change that. Of course, you can change that to 1.5 or 3. I know our friend Anthony Crudelli likes a 3 standard deviation band on the Bollinger Band. You could do the same thing with Keltner channel. Instead of using standard deviation, you could use a higher multiple of that average true range. It'll just widen the bands out. But it's the same concept. When we are coming out of a small area like here, where the bands are fairly tight, if we come out of them, we should be pressing up against the upper band in an uptrend or the lower band in a downtrend. But until we start testing those levels, we might be consolidating for a little bit, right? We might be trading around that midline, around that moving average. So you'll notice we don't trade outside the band. We don't trade outside the band. We revert back to the midline. In fact, we almost get back to the lower band. We get around the mid band again. We try to get up there. We don't. And we're kind of trading around it. Markets don't always trade sideways, right? Eventually they trend. And when they do, we'll start to see trading outside those bands. Now they can come in, but if the midline holds a support, then I'm looking for that upper band again. So the Keltner channel, even though it's called a channel, it's more like Bollinger Bands, but it's the same concept. We're looking for, in a moving market, where the upper boundary could be, where the lower boundary could be. And in this case, they can help us with whether the market's trending. If we see consistent closes outside the upper band, that's different than if we see one close and come back in. The one close and come back in is more mean reversion. The multiple closes above the band is a trending market. So Keltner channels can be helpful with that as well. let me just take a quick look. Polly H says, are the channels working because so many traders are using them? So that's a great question. I think there is some of that. I think they work because people are understanding that, well, if we go back to trend channels as a basic concept, this is something that most people can determine, right? Most people can see that we were going up and then we were going down. Once we start drawing these trend channels here, and if you do it, I would say correctly, I think there is a correct way to do this. We could talk about loosely fitting, and that's fun to talk about. But generally, if we use that same kind of concept where there is a process, the process is looking at the pretty much the two levels or extreme points you're going to use to determine the direction, and then the extreme level on the other side to give depth to that channel. Then we have a set of lines that other people know about as well, even though it isn't auto calculated. You run the risk of a shaky hand, blurry eyes in the morning, a little bit of subjectivity, but I think this is straightforward enough that we can see that we do it correctly, and we can see that, look, when we get near here, this might be we run out of buyers there. Look, nobody's going to sell it to me above this level. We're hitting resistance, or we run out of sellers here, right? Nobody wants to sell this low. The buyers are just going to snap it up because it's support. I think there is some of that, Paulie. But again, ranges are made to be broken as well. So just because we draw two lines on a chart and other participants draw two lines in a chart, at some point there will be something that will change the dynamic, right? Now we start talking about a different type of market. There's different type of news. There's different type of projections about where stocks should be. We might see an uptrend or a downtrend that gets outside of it. But until we get that proof, until we get that example, we can use these as guides. Certainly in our longer trading, in our swing trading, but even in the intraday, because right now I know on the NASDAQ, what do we say? 15,300 is about a level that we might expect resistance today. That would be lower tomorrow. I should say Monday or Sunday night. That'll be a lower value because that's a trend line arcing down. So thanks for that question, Paulie. I appreciate it. And thanks for everybody coming to watch this show. That's all I have to say about channels. They're good guides for support and resistance. And they could be, if you think about range-bound trading doesn't have to be just a sideways path, right? Ups and downs in a sideways path. It could be a downtrend. It could be an uptrend. And these channels might help you pull that information out a little easier. I want to thank everybody for coming. We will finish the day with Mike Burke at bars closing, 3:15 p.m. Eastern. In the meantime, have a great trading day.